Hello, everyone. Welcome back to my channel where we empower entrepreneurs and business owners like you with the financial tools and knowledge you need to thrive. If you are new here, my name is Carla, and in today's video, we are diving deep into the world of business loans. How to understand your business credit score, how to build a strong business credit profile, and how to get approved for a loan. Don't forget to hit that subscribe button for more insightful content. Now let's get started. First up, let's talk about what a business credit score is. Basically, this is similar to your personal credit score. A business credit score, it reflects your credit worthiness of the credit worthiness of your business. It ranges typically from 0 to 100, with higher score indicating the lower risk to lenders. Major bureaus like Dun and Bradstreet, Experian Business, and Equifax Business provide these scores based on factors like payment history, credit utilization, and public records. A good business credit score not only helps you securing loans, but also gets you better interest rates. So building a healthy business profile is crucial for a loan approval. Here is how you can strengthen yours. First, pay your bills on time. Late payments can significantly impact your credit score negatively, so don't do that. Don't fall for these. Try to pay all of your bills on time. You don't want these negative items on your credit report. It's really hard to deal with it or dispute it. It's not impossible. Obviously, we need to handle it, but if you can avoid this, don't go this route. Just pay your bill on time and you will be good to go. The next thing is manage your debt wisely. Basically, keep your utilization low, ideally under 10% or below of your credit limit. With this, what I'm saying is you can reuse your credit limit as much as you want, pay it and use it again. But what you need to keep in mind is by the statement date close, you need to have in by that date you need to have just a 10% or below of the credit limit of that credit card or that amount. So basically this is how it's going to help you. After the statement close, you can pay off the remaining balance, which is the 10% that you is still on their pending, and you can go from there and use it again and go from there. It's like a game. It's like a cycle that you have to understand, and you will be good to go too. The next thing basically is review your credit report constantly to ensure accuracy. So dispute any error or discrepancy that you might find in, because basically those kind of things gonna pull your score down, and we don't want that. We wanted to keep our credit score as higher as possible. Establish credit accounts with suppliers who reports to the credit bureaus, okay, to the business credit bureaus. This is important to know. What we want to focus is on credit account that just report to business credit bureaus, because there is business or accounts that report to both personal and business sides. We don't want that, because if for any reason you have something on your credit that can using that credit product that can hurt both of your credit, and we don't want that, the personal and the business side. Why? That's the reason, actually the main one, that we keep business and personal separate. That way you don't have to deal with if one is in a bad standing, the other one is too. Just keep it separate and you will be good to go. With that being said, establishing credit account with suppliers who report to business credit bureaus, this help builds your credit history. So try also to keep suppliers and lenders as much as you can on your credit, because that adds some value on your credit history worthiness. If you're finding this guide helpful so far, please subscribe to my channel, hit the like button, and if you have any question, comment in the section below. That way we can go from there. And I also want to invite you to my free VIP group, which I go in deeper with exclusive tips and resources that might be able to help you out. I will leave the link in the description box below. coming back to the subject, understanding different type of business loan is key. So here is a breakdown. You need to know term loans are what you might think of as a standard loan. You receive a lump sum of money that you pay back with interest over a set period of time. Line of credit offer more flexibility, allowing you to borrow up to a certain limit and pay interest only on the amount that you use. That's a key difference there. So when you purchase a loan, a regular loan, you're gonna pay interest for the full amount, um, and make payments from there. With a line of credit, you're gonna pay interest, but you're gonna pay just interest on the amount that you use. The next thing is equipment financing and SBA loan are a specific type of loans for purchasing equipment or getting lower rates loan backed by the Small Business Administration, respectively. So, getting approved isn't just about having a good credit score. Lenders also consider your business financial health. They look at the revenue, profits, and cash flow. Something also your personal credit score might also play a role, especially in smaller or newer businesses, because your business is new. Well, you might not have a strong credit business credit profile that can back up your finance or your financial health. So they might ask for your credit personal credit score or credit um, report. There is also a collateral that is in the game, which some loans require you to pledge asset as security. So this means that maybe you have to put down some kind of title or something as collateral that can back up your loan. The next thing is a business plan and projections. So some lenders want to see that you get or you can provide a business plan and projections. That way they can analyze your vision for your business, where it's going, the reality, the future, and all of those things. So lenders often want to see a solid plan and future financial projection. That way they can decide if they can borrow or lend some money to you. Let's talk about a real world application. Imagine you are a retail store looking to expand, right? A strong business credit credit score can help you secure a term loan to open a new location. Or if you are a startup business needing flexibility, a line of credit might allow you to manage cash flow effectively during a slower month. So you see how this go is depend where you are stage at the business at the moment, what is your desire or your goal, then you can determine which one is the best choice for you. To navigate the business loan process effectively, maintain a robust credit profile, understand the loan types available to you, and prepare detailed financial statements. So basically, be ready when you are going to apply for a loan. That way, you have everything that you need handy. That way, you can just put it there and go from there. These steps will increase tremendously your chances of approval and help you secure the best terms. Thank you for turning in. If this video helped you, please like this video, subscribe to my channel, and share with us any comments or experience that you might have in the comment section below. Don't forget to join my free VIP group for more insight and support on your business journey. I will leave the link in the description box below. I will see you in the next one. Bye.